Stop what you're doing. Seriously, if you own semiconductor stocks, or if you're hunting for the next big AI play, you absolutely need to hear this 5-model valuation breakdown of Phison Electronics. Last week, I ran this quiet Taiwanese powerhouse through 5 strict valuation models and 2 legendary investor checklists. And to be honest, what I found completely shocked me. We are looking at a company that is quite literally reshaping the hardware economics of artificial intelligence.
Let's be honest, as retail investors, we're all terrified of buying at the top of an AI bubble, right? You look at the massive multiples on popular chip makers and cloud providers, and it kind of feels like all the easy money has already been made. But what if I told you there's a backdoor AI enabler acting as digital steroids for the entire GPU industry, completely defying the odds? What if a company is being fundamentally mispriced simply because the mainstream market totally misunderstands its core business model?
Okay, let's just dive right in. We are looking at a tech company sitting on a forward PE of just 8.63. I mean, in the hyperinflated AI sector, a single-digit forward PE is practically a unicorn. Combine that with a monstrous 37.23% return on equity, and you start to see why this isn't your average hardware stock. The math suggests this stock's intrinsic value could be drastically higher than its current market price. And stick around, because I promise to give you a clear, actionable framework that you can literally steal today to evaluate it yourself.
Just think about how these numbers violently shift the fundamentals. We're talking about record-breaking Q1 earnings, 196% year-over-year revenue explosion, and an astonishing 1,230% jump in net income. Insane, right? By the end of this explainer, you're going to know exactly if these wild numbers make Phison a Warren Buffett buy or a Peter Lynch value trap.
Section 1. What is Phison 3.0? The AI pivot.
So to really understand those massive earnings, we first need to understand their structural shift. Historically, Phison has been known for making retail NAND flash controllers, the chips inside the SSDs of your gaming PC or your laptop. But recently, they deliberately pivoted to what they call Phison 3.0. They are now focusing heavily on enterprise AI infrastructure and servers. In fact, they've purposely throttled their retail consumer volume, and non-consumer business now makes up more than 70% of their revenue. This isn't just a pivot, it's a complete reinvention to capture the absolute most lucrative segments of the tech market.
And the real secret sauce here is their Adaptive Plus technology. You see, the biggest bottleneck in AI right now isn't just compute power, it's memory. GPUs have limited, incredibly expensive VRAM. Well, Phison's Adaptive Plus elegantly solves this by using cost-effective NAND flash memory to offload those massive memory demands. They're essentially tricking the system into using standard, high-capacity flash storage as an extension of the GPU's brain.
The real-world impact of this technology is absolutely staggering. In testing with partners like Acer, this breakthrough allows local systems to run massive 120 billion parameter models on just 32 gigabytes of system DRAM. That's a workload that traditionally required massive, super expensive servers. They're accelerating inference response times by 10x, cutting memory usage by 67%, and lowering local AI deployment costs by up to 53%. They're literally democratizing massive AI models, pulling them right out of the cloud and onto everyday devices.
Section 2. The macro catalyst, the NAND supply squeeze.
Now, great technology is one thing, but timing a massive macroeconomic supply squeeze, that's what creates legendary returns. The global NAND flash shortage is severely worsening. Prices effectively doubled over a 6-month period. But Phison smartly locked in their 2026 allocations back in mid-2025 during a market lull. Now, an acute supply crunch is projected to hit by the second half of 2026, and here's the kicker. New fabrication capacity isn't expected to come online until late 2027 at the absolute earliest.
This shortage is so severe, it prompted a stark warning from Phison's CEO, Pua Kai-Seng. He stated that the supply crush will be so intense that even money can't buy stock in Q4 2026. Thankfully, Phison is sitting on roughly 50 billion new Taiwan dollars in inventory, all purchased when prices were much lower. This inventory hoarding perfectly explains exactly why their gross margins in Q1 suddenly jumped to a staggering 61.3%.
Section 3. Running the 5 models. Deep fundamental analysis.
I promised you a clear, actionable framework, so let's plug this explosive data in and look way beyond the hype. Looking at our first 2 models, the trailing PE sits at a reasonable 25.28, but because of their massive earnings acceleration, that forward PE drops to an incredibly cheap 8.63. The real shocker here, however, is the PEG ratio. Usually anything under 1 is considered undervalued. Phison is sitting at an insanely low 0.17. That indicates massive growth potential, currently trading at a deep discount.
Moving to our third model, we evaluate enterprise value against EBITDA. Phison shows a healthy 21.58 multiple, but what you really need to know is that this is backed by an incredibly secure balance sheet. Notice how their market cap and enterprise value are practically identical? That's because they carry very little net debt. In fact, they are sitting on the war chest of over $22.5 billion in cash and equivalents. They have the financial fortress required to weather any macro storms while they aggressively expand their AI infrastructure. Finally, our fourth and fifth models rely on automated intrinsic value calculations from our data sources. Both the Graham number and the Peter Lynch fair value models trigger a definitive upgrade status. This strongly reveals that the market might be heavily mispricing Phison's robust 102 new Taiwan dollar trailing earnings per share. Basically, the math is screaming that the current stock price does not reflect the new fundamental reality of the company.
Section 4. The Legends, Buffett, and Lynch checklists.
So the models look absolutely fantastic, but is this explosive net income jump sustainable, or is it just a cyclical mirage? Let's ask Warren Buffett. The Oracle of Omaha loves efficient, cash-rich monopolies, right? Step 1. Phison boasts a monstrous 37.23% return on equity. Step 2. Their profit margins are hitting a massive 37% net margin in Q1. And Step 3. They have $22.5 billion in cash to protect the downside. Phison literally checks every single box for a Buffett-style deep value moat.
Okay, but what would Peter Lynch say? Lynch is the absolute king of finding hyper-growth stocks whose prices just haven't caught up to their earnings yet. Step 1. A PEG ratio well under 1.0. Phison is at 0.17. Step 2. A low debt-to-equity ratio. Phison sits very comfortably at just 0.30. And Step 3. A proven growth catalyst, which we clearly see in their 196% year-over-year revenue growth driven by the AI sector.
The results from these legendary checklists prove something highly unusual. It is incredibly rare to find a stock that passes both a strict value checklist and a strict hypergrowth checklist. Phison bridges this rare gap between deep value stability, thanks to their low debt, high cash, and massive inventory, and explosive technological growth driven by their adaptive plus innovations in the AI hardware space.
Section 5. The final verdict. GARP in the AI sector.
In the investing world, we call this GARP, growth at a reasonable price. And let me tell you, finding GARP inside the current AI boom is like finding water in the desert. With severe global land shortages pushing memory prices to the moon, and their adaptive plus technology brilliantly solving the massive GPU memory bottleneck, the fundamental winds are blowing deeply in their favor. So knowing what you know now, how does this quiet Taiwanese powerhouse fit into your own investing strategy? Take this framework, dive into the numbers yourself, and honestly, happy researching.